What's up, everyone? Dylan O'Neill here. I wanted to hop on and record the first episode of the weekly analysis video. So, going forward, I'm going to post this video every single Sunday. And I'm going to talk about my overall market analysis. I'll talk about some setups that I'm looking at for that particular week. And I'll also go over some critical levels to look out for. So please, if you don't mind, let me know your ideas and recommendations for future videos. Maybe you guys have good ideas on some more things to implement, or maybe you want me to take out some content. I want to try my best to implement your guys' ideas so that I can cater to your wants and needs. So, with that said, we'll get right into it. And in this video, I'll also talk about the long position that I've been managing the last 2 days. And then I'll also talk about some of the trades that I took today. Today was pretty busy for me, busier than normal. And I'll talk about, why I took those plays, what my plan was, my thesis, so on and so forth. So, let's start on a monthly chart. Totally naked chart. I'll start from, I'll go from the start to the finish and explain what type of things I look for when analyzing the overall market. So, starting with monthly, I wanted to mark this very important level. Okay. So, this 4260 level. Okay. This level is important because, as you can see on a monthly candlestick chart, buyers have been able to defend that level on a monthly basis. So although price has dipped below, a quite good amount, right? In this candle right here, February of 2022, we made a low of 41.01. So although price was willing to, or able to go 160 points through that level, bulls were still able to buy that dip and push value higher before that monthly candle close. So, like I said, as a bull, you want to see every monthly candle close above that 4260. Okay? If the bears are able to close a monthly candle below 4260, it is not good for the bulls. Okay, so a lot of retail traders, including myself when I first started, would only look at the intraday time frames, right? When I first started, I disregarded monthly, weekly, daily, so on and so forth, and I put most of my focus on, 1 minute, 3 minute, 5 minute charts, and I failed to really get a good idea of where the market was heading, right? When you fail to look at the macro perspective time frames, you're missing out on a lot of crucial information. So market context is key. It's all about piecing together different, pieces of the puzzle. And like I said in this video, I'm going to do that for you guys. So make sure you're looking at all of the different time frames because each time frame shows you a different perspective that helps you piece those puzzles together. So going forward, let's go to a weekly chart. So this weekly zone has been very important for the trade that I've been managing the last 2 days. So we have this weekly demand zone on ES, and unfortunately, let me draw that better. Unfortunately, it's a wide zone. So ideally, you want the zone to be somewhat tight, not too tight, but somewhat tight, so that you can have an easier time managing the risk. Okay, so let's just say this weekly demand started at 4,300 and then it ended at 4280, right? You can buy at 4300, and then you could put your stop at 4280 as that, that zone. If it gets invalidated, that would invalidate your thesis, right? So you would put your stop at 4280, and then that's it, right? That's a valid plan. In this case, it starts at 4308 and goes down to 4129. That's a big range, so it's very difficult to pinpoint exactly where the bounce is going to be and pinpoint where your stop should be. So the wider the zone, the harder it is to kind of trade around it. Okay, so now that we have this nice monthly support and this weekly demand zone, we can really start to piece together how we're going to trade this zone. Okay, so let's go to a daily chart. Daily, we have this. I didn't mark it as a daily demand, but looking in hindsight, it was a nice zone. I know Carmine mentioned it. At first, I didn't like that upper wick, but we did have a lower wick from the rally candle. So looking at it in hindsight, this is a very nice daily demand zone. As you can see, this is the basing candle, the rally, and then there's nice continuation thereafter. And in hindsight, we could see that it bounced there today. Not only did it bounce at daily demand, it also was 4,200 psychological number. So as I've said in the past, psychological whole numbers tend to act as support and resistance because traders tend to gravitate towards those levels. Like I said, it's psychological, and trading is based mainly on psychology. So now we have this weekly zone, we have a daily zone, and we have this nice monthly 4260 area. You see how I'm piecing together different context clues. That's what trading is all about. Trading is all about probability. The more context clues that you can back up your thesis with increases the probability, and when you increase the probability of a setup, that ensures that you're taking high quality trades. Okay, that is the name of the game, not some bullshit 5-minute pennant that you see on Apple's chart, right? That if you do that, you have no edge in this market. This with what you're seeing me doing right now, this is what I do every single day. Okay? And as you have this experience, the screen time, and just practicing piecing these puzzles together, you get better and better. Okay? So now we have 3 confirmations. Let's add another one. Look at this nice trend line. What do you know? ES bounced exactly at it today. All right, let's go to a 4-hour, break it down a little bit more. Support there, and then boom, look at that. Is that a coincidence or what, right? History tends to repeat itself. It bounced there, and it bounced there, which lined up with the 4,200 psychological number and daily demand, okay? So this is why I was interested in averaging down on this particular play. Like I said, when you have a wider zone, it's very, very difficult to pinpoint an exact specific level. So because I didn't have an exact specific level, I was willing to dollar cost average and scale into the position, okay? Could it have bounced at 4309 the moment it got to weekly demand? Yes, it could have, 100%. That's why I added there. I added 10 contracts there. That was my starter position. Could it have bounced at 4275? Yes, it could have, right? Look at this daily chart. I'm going to put my cursor, right, or the crosshair at 4275, right? This is 4275, that red line, right? You could clearly see the nice support at that area. I'll go like this. I'll make it pink so you can see it. So at that 4275 area, you could see clear support. So that's why I added at 42.75 as well. Could it have bounced at 42.75? Of course. Then I added at 42.50, which is also a nice support level. If you want, you could, put your support there at 42.50 and you'll see it. Then I added at 4,200 as I just went over, okay? So there were reasons behind my entries. I didn't just pick a random number out of a hat and say, 42.74, okay, let me buy there. No, they had reasoning behind them, and that is key. When you formulate a plan, your plans need to make sense. I see so many of you blindly entering trades and exiting trades, and then you look in hindsight at those trades and you see that you've missed out on a ton of profit. And I ask, I have members DMing me, hey man, take a look at this trade, right? And say, I'm just making up numbers, right? Say they enter Tesla at 1,000 and then sell at 1,008, right? Tesla ends up going to 1,030. So I asked them, hey man, why'd you sell at 1,008? And they say, I don't know. It blows my mind, right? So if you make a plan, it is so important to come up with both entries, exits, and a stop loss that make sense. For me, I use zones and levels. Okay, zones, levels, and trend lines. Those are how I make up the entries, exits, and stop losses. For every single trade I take, that is the case. Okay, and you should be doing the same. You shouldn't just sell or enter when you feel like it because it looks good. Like, no, that's not how it works. There's no edge. Okay, so as you can see, weekly demand, monthly support, daily demand, 4,200 psych number, and this nice trend line. That's 5 confirmations that are backing up this particular zone. In terms of fundamentals, right, the reason why we've had this dip, including this one here, and every single bounce has been sold, there's 3 main reasons that I can think of. One is the monetary tightening expectations, right, with the rates. 2 is a more recent one, and this is part of the reason we've seen this more, this recent drop is because of China's zero tolerance approach to COVID. So in China, they have a lockdown over there, which is pretty significant, and it's really affecting the global supply chain. It's affecting commodities. That's one of the reasons why I shorted crude today. I'll go over that, and as well as many other things. And then the last one is Russia's ongoing war against Ukraine. So that one we've been, we've had for the last, it's probably been might be like 2 months at this point. I could be wrong about that, but I think it's been two months since that really started getting bloody. So those 3 things are really putting pressure on the market. So those 3 things caused this drop, and then with that drop, when everyone and their mother is bearish, you should have seen Twitter on Friday. I on my way home from work, I was on the bus going home, and I was scrolling through Twitter, and all I saw were bearish. I mean, it was bearish like you wouldn't believe. People had puts, and people, were looking at bearish setups, and so on and so forth. So when everyone and their mother is long or short, one or the other, you get the most aggressive, violent moves, okay? When you're in a range, such as we were right here, right? This area right here was in between the lows down here and the highs up here. when you're in a range, right, in the middle of a range of a particular high and low, a lot of market participants sit on the sidelines, right? There's really not much edge. A lot of market participants gravitate towards the market when you're at a low or a high because there's more conviction. So when a lot of people are long, such as this 4,600, right? We talked about this a few weeks ago. I talked about why I thought the market was going to find resistance here. Same deal, because everyone in the mother was long, right? So when a lot of people are long, right, they think, oh wow, we're breaking over this double top. The market found support near 4,200, and now we're gonna see all-time highs. A lot of people were long up here, right? So with that said, they get trapped. Okay, when you have trapped longs and then the market starts to roll over, those trapped longs have to now stop out, and that fuels the market lower. Same deal here. When you have a lot of people shorting and you get a bounce, that bounce makes them stop out. They have to cover, and that's where you get a short squeeze. So that is another reason why I liked the buy down here. I saw everyone was short on Friday. Everyone was bearish. Everyone thought that the market was going to see, new lows, so on and so forth, sub 4,000. People were calling for like 3,800, 3,500. I saw it all. I like that because when the masses are short and we get a bounce, a violent bounce, they have to cover, and it fuels the market higher, okay? So, like I said, there were a ton of different reasons. If that wasn't enough reasons, we'll go to RTY, right? The Russell. We'll go to my chart. RTY. Okay. All right, let's go to a daily chart. Watch this. So we have this 1920 level, 1920.5. You could find this on the key level document. For those of you that are new, I'll show you. Let's see, cheat sheets. Right here, I posted a document. Let's see. RTY, you could see 1920.5. So these are the exact levels that I particularly use to gauge market strength and weakness, determine the trends, and all that kind of stuff. And I use these levels every single day. So, like I said, let me just get rid of this. So, this 1920.5, right? Since December of 2020, over a year ago, similar to that ES monthly level, every single day has been able to hold that 1920.5 level, okay? You could look at these long wicks, 1, 2, 3, 4, 5, 6, 7, right? So each day that the Russell breaks below that pink level, buyers are willing to buy the dip and push value back over. So we haven't had a daily close below that level since, like I said, December of 2020. Okay, so that also lined up with the ES, right? We had how many freaking confirmations on ES? 5 or 6, right? This was another confirmation, okay? And I've gotten questions recently saying like, oh, how much significance is the Russell with, in regards to ES and NQ? So with any overall market move, when you have all the indices moving simultaneously in the same direction, that is where you'll get the biggest and most continuation, okay? So if you have the Russell weak, the NASDAQ strong, ES weak, Dow strong, there's going to be a lot of chop. However, if you have Dow strong, ES strong, NQ strong, Russell strong, so on and so forth, you're going to get a nice, strong rally backed up with continuation. Okay, so what I'm thinking is going forward, maybe the Russell bounces from here, gets up here, retests this trend level, trend line, and then it might roll over. So a plan, right? This is a new topic, right? A plan, I always say to make your plans before the market opens. Do it outside of market hours because that ensures that you are prepared. Preparation is key in trading. I get the question all the time. Hey, Dylan, how do you make setups outside of market hours? Like, how do you do that? Okay, take this one for example. This is a setup that I'll be watching. You come up with hypothetical scenarios, okay? Start off with if the Russell bounces up and hits this retest of this prior support, now resistance, then, right, hypothesis, if this happens, then I'm going to short it because, and here's where your confirmations come in, because we're at prior support, now resistance, we're in a downtrend where pops continue to get sold, right? They bounce, sell, bounce, sell, bounce, sell. And then I'm going to target 1920.5 on my short because that's an area of support. Okay, so you see how I'm coming up with a hypothetical scenario that has not happened yet. But if this were to happen, I now have a plan. So all I have to do is react. Okay, you see how that works? That's exactly what I do. Okay, on top of that, if that wasn't enough, we have this pretty cool trick. So I remember, I forget who, shout yourself out, please. Excuse me. A member in the chat last week said that you could do this. You could do this on TradingView and Thinkorswim. You may be able to do it on other platforms, but I have no idea because I haven't tried it. But definitely on TOS and TradingView. All you do is type in AAPL plus Amazon plus Microsoft and so on. So what this does is that combines all of those stocks. I picked 5 stocks. It combines those 5 stocks into one index. Okay? These are the 5 heaviest weighted stocks. So chances are, whatever these 5 stocks do as a bunch, the market will follow. Okay? Like I said, these are the heaviest weighted stocks. So they tend to move the market. So these two have a similar look to the ES, right? So like I said, using the cursor, you can see this area is strong support, right? Nice bottom wicks on a weekly chart. We're right there. It also has that weekly demand, as you can see, similar to ES. And then I use this as a way to determine, where the market is heading next. And the reason why I got 4,500 on ES from last week, I don't know if you guys remember, I said that 4,500 was going to be tough resistance. I got that from watching this. So this teal level right here, that lined up with the 4,500 level. So that was April 21st. You could see 4,500 was April 21st. So on this name, you could see that it was prior support, right? Support, and then it became resistance. So I used this on top of ES, NQ, Russell, the VIX, so on and so forth. Also, I've mentioned this plenty of times. I still get asked all the time. I use VIX futures to chart. You could do it on TOS. On TradingView, for whatever reason, they limit your time frame, so you're not able to look at the VIX futures. So with that said, if you're looking at VIX, use these levels. I plotted this for this. Pause your screen, and you can jot down these levels, the pink levels. Because my VIX futures levels will not work for you if you use VIX. So if you use VIX, you could use these levels. These levels will work well. So let's go into some of the trades that I took today. Like I said, this is the first video of its kind. If you want me to add shit, if you want me to take out shit, let me know. I'm kind of just winging this. So, like I said, today was a busy day in the commodity space. Let's see, we'll go to a 4 hour. Okay. So, I shorted crude last night. The reason I shorted it was because of China's zero tolerance lockdowns. The whole, I don't know if it's all of China, but definitely like the major cities like Shanghai, they're in a full-blown lockdown, right? And if you remember when the United States had their lockdown in 2020, 2021, the price of oil got absolutely decimated. In fact, the price of oil actually went into negative territory. Let's see, on a weekly chart, you could see just straight up CL. You could see this wick, right? You could see negative, which was crazy. I wasn't trading oil at this time, but the price of oil went into the negative territory because there was no demand for oil, right? Everyone was locked in their houses during the lockdown. No one was driving, no one was traveling, cruise ships, airplanes, so on and so forth. They just didn't have the need for oil. So with that said, I used that same exact thesis, and because of the lack of demand in China for oil, on top of the 100 psychological whole number, right? I mentioned that in this video. It bounced at 100 prior. So I'm going to use a pink level to indicate 100, right? So 99.88 is close enough. I'll make it 100 because I have OCD. Okay, so 100, not only is it psychological whole number, but it also acted as support here, and then the last pullback was bought directly at 100. So with that said, my entry, like I said, entry has to make sense. My entry was 100. I wanted to see a breach below 100 to get short, and guess what my target was based on the information shown in this chart. If you guessed 94, you would be correct. Why 94? Trendline support, right? Support, 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 and then right here, it was going to line up with, around 94. Okay, so, and the horizontal 94 level also acted as somewhat support over here too. So not only was it a trend support, it was also a horizontal support from, short term. So, like I said, I was going to short. I shorted 100. I was going to cover and fall at 94. However, it never got down there. Why did I cover before 94? Right, this was a big trade. I made over $750,000 on this. I sized the fuck up. Excuse my language. Why didn't I wait for 94? It's simple, right? I mean, it's simple for me. So if we look, we want to see, similar to ES, NQ, Russell, Dow, right? When I say they all want to move simultaneously for the clearest moves with sustaining value, continuation, so on and so forth. That goes for the energies too. Crude oil, RBOB gasoline, heating oil, and Brent, okay? These four, CL, RB, HO, and BZ, are the tickers. These four tend to move together. When they all align, you'll have the best moves, right? The most continuation. So if we look, they all have a very similar pattern. Like I said, 4-hour chart. You'll see this nice wedge and some of my key support and resistance levels, right? Let's go to RBOB, right? Same wedge. Brent, same wedge. You could see Brent basically got down to that trend level, and it bounced right around the trend and right around this area of support, right? Prior resistance, then it became a resistance again, then support, and then now again support. Okay, so that was one reason I covered crude, because Brent was coming down to support. Another big reason I covered crude is because heating oil was showing clear relative strength. So ideally, I wanted to see crude, RBOB, Brent, and heating oil all near the lower range of this wedge, right? The lower it is to the support, the weaker, okay? However, heating oil was nowhere near the low of this range, right? It was nowhere near this area of trendline support. In fact, it was holding value very well near the highs of this pattern, despite the fact that Brent was near the lows, okay? So, because of that discrepancy and its ability to hold this 383 key support, right? You could see it was resistance, then it got above and acted as support, right? Support, 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 support. Once this held that 383 and started to bounce, I covered crude, and then I actually bought heating oil. So I bought heating oil at around 3855. So I saw it bounce, right? I actually got up because in the morning, this happened at like 5 a.m. In the morning, I usually wake up at 5:45, but I got an alert at, I set this as an alert. So my phone is next to me. I got the alert, and I saw that heating oil was at this level. Like I said, ideally, I wanted it to breach below because that would have helped my crude short, but that wasn't the case. So once I saw this bounce, I didn't get in until around 8 a.m., right? 385. So when it bounced, pulled back, I got in around 385.5, like right here, right where my cursor is. So the reason I got in, like I said, clear relative strength, and it was bouncing at this nice support area. With that said, my target was a break above this wedge, right? You can see it was a nice resistance. 1, 2, 3, and it lined up with this resistance up top, right? Clear resistance there, then support, resistance, resistance. Okay, so two different areas of resistance, this trend line and this horizontal level. So, like I said, I entered down here, and then I exited some at the trend line in case it wanted to reject there. I exited some here, and then I exited some at 3998, and then I exited some, along the way. I'm still long heating oil as we speak, but you could see how I didn't just focus on my crude short. Instead, I also looked at RBOB, Brent, and heating oil. And I saw the heating oil clear relative strength, and I used that to my advantage to not only close my short position in crude, but to also get long heating oil because I saw a good opportunity. Another trade I took was natural gas. I was short this thing. I was going to cover at 6199, which was prior resistance. You could see there's resistance and then like resistance. So I was going to cover at 6199, and then I was going to cover again at 6, and I was actually going to reverse. I was actually going to cover my full short position at 6, and then reverse and get long for a potential bounce. Obviously, we didn't get there, and then I stopped out at 661. So I lost money on this today. And then copper, I told you guys I lost I think I lost 84,000, close to 85,000 on this today. This one hurt. I got long at 44985 because it was a key support level. This pink line is a horizontal support, and it lined up with this nice trend line. So despite this candle, you could see it was nice support. So I like the fact that this prior resistance, you could see support here, resistance, support. I like that it lined up with this trend line support as well as horizontal support. Plus, it's in an uptrend. There's a few different reasons why I got long. I literally just placed a limit order here, and you could see it barely even bounced a little bit. And then I stopped out right here when it broke below the low. So I stopped out at around 9:15. I bought 50 lots and then I sold 50 lots there. I was also long coming into the day too. I was long with 11. So like I said, I do not make money on every single trade. That is a fact. Okay, so some of my plays do not go as planned. Obviously, if that wasn't the case, I'd be fucking neighbors with Jeff Bezos. Every single trader loses. Even the professional traders in my office do. So as a trader, if you cannot take losses without, brushing them off and moving on, it's going to be nearly impossible for you to be successful. That's a goddamn fact. And then the last thing I took was this palladium short. This was really nice. I got short on Friday at around, let's see. I only played 3 lots on this thing. This thing's a beast. I've lost a lot of money on palladium before. I got short right here on Friday. So it broke below this trend support line, and then it retested it, and then I got short below this pink level at 23.70. It's a very thin market. You could see low volume, but I got short below this pink level, and then I held 3 lots over the weekend, and you could see this morning it absolutely fell off a cliff. I don't think I found, I briefly searched for news when this happened, and I couldn't really find anything, but it worked out in my favor. I covered one at 22.05. I covered another one at 2100 even right here, and then I was going to cover my last one at 2000, and then I'm looking to buy at weekly demand if it gets down there. You can see it's a nice zone, this zone here. So like I said, going forward, hypothetical scenario, I will buy if it gets down to weekly demand. I'll make a plan around it. I'm going to cut this video here. It's fucking 40 minutes long. But going forward, like I said, I'll talk about more setups. I'll talk about different levels that I'm watching, and I'll try to make it much shorter on every Sunday, just to give you a brief, quick video regarding my thoughts, my analysis, and so on. So like I said, please give me your ideas, any recommendations, and hopefully you learned a lot from this video. If not, fucking I apologize. Peace.